So, should we buy or sell the US dollar index? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. We are 10% from the 52-week low, but almost 10% away here from the highs as well. Here is the data from the index itself. You have the UUP ETF if you want to use any ETF. The US dollar, it's been on a very strong rally since 2008, but recently we have seen a very substantial pullback. So up here, people were like, oh, the US dollar going to the moon, and then you do see a pretty sizable correction. We did lose the green 50-week moving average, which is a bit of a big deal because it was supported down here. Looking at the daily data point, we lost the 200-day moving average and it became resistance, which also a bit of a big deal. However, from a more bullish perspective, we could be forming a bit of a rounding-ish bottom formation here, which would be bullish if it were to form. So let's look here at these other indicators. Looking at the MACD, the RSI, and the 20-week PPO here in purple, we are at an interesting level for a reversal, but not like a screaming buy here on the weeklies. On the dailies, same thing. It's pretty interesting. We have been very low now, but we didn't really actually get oversold. It wasn't like a screaming buy, but it was a bit of a whispering buy. So I write a rounding bottom, and I give the bulls a 3 here. A bit of a modest score, but there's something bullish here after this sizable correction. Then again, the last candlestick we got here for the US dollar index was very bearish and engulfing, so it's messy, but more bullish than bearish. Let's look at the seasonality. So yeah, we do the dailies. So we usually see some strength here into mid-January. So not like a huge protracted rally, but usually some strength. So far, we have 0.38% gain for the month. The previous years, going back here to 2019, were, there was more upside. 2017 and 2018 were more bearish. February, at least as of late, since 2014, it's been substantially more bullish than bearish. So the seasonality here leans in a bullish direction. In this case, the bulls get a 4 here on the seasonality. The issue is that the bullish seasonality has a bit of a tendency only to extend, well, at least primarily extend into the mid of the month. But given that we still are in the early phases of January, there could be more upside. When it comes to the fundamentals, I will give a 4 here. It's really tricky to do fundamental analysis of the US dollar in this context. It's very messy. But the data I have seen pushes me in the direction of a 4, given the recent pullback in the dollar. The context. Let's look at relative performance. Long term, there is a minus 12% correlation with S&P 500. There is, if you do it like this and like this, 79% positive with the 10-year yield and minus 41% with gold. Looking at daily data points, minus 45% with S&P 500, 48% with the 10-year yield, and minus 94% here with gold. So recently the correlation with gold has become sharply negative, but looking longer term, it usually is around minus 40-ish, at least recently. So looking long and short term. The strongest correlation we do get is with the 10-year yield, but we might as well also have a bit of a look here at gold. So like that. So let's look at the TNX. TNX, which is the 10-year yield. Weekly data points. Seeing a bit of a correction here in the 10-year yield on the dailies. Not at like any clean support level. Let's look a bit at the seasonality. Yeah, to the left here it is pretty bearish into February, and also here to the right it's been pretty bearish. So could be some downside here for the 10-year yield potentially. I'm gonna look at gold, GLD. Very strong rally though, very impressive in that sense. But it's been many green weeks now in a row. Sounds a bit too good to be true. There was like a period comparable, back here you had many green weeks, everything was good. That was the worst time to turn bullish on gold. Also down here you have like green, and then you did have a more protracted correction. I do think that long term the situation is very good for gold, but I don't think that this context is a great situation to really try to have a multi year breakout. That would be very risky, because if we look here at the RSI and the PPOs, not really super dangerous yet on the weekly RSI and PPO, but risky. On the dailies, we are pretty elevated. We have obviously been higher in the past, but this has been a lot of rally very quickly. Would make sense to have a little bit of a break and then have that final push and really have like multi-year all-time highs even for gold. The seasonality for January is pretty good though. You can see that there's a lot of green months. So far 2.4% for the month, which is good. But looking at some of the previous months here, there could be more upside. But it's not that much left until we get those gains where we would expect a bit of a correction. So there was a negative correlation with the dollar index and gold. The dollar index has recently seen a pretty substantial correction after being really super bullish. However, gold has seen a very strong rally, getting into some long-term resistance territory. It would make a lot of sense for gold to have a little bit of a cool down before making that big push. To make the big push now, it's so dangerous. Very high risky game. So I'm going to lean here more bullish in terms of the dollar index in this relative performance analysis. I give the bulls a 5. We end up with 4 in favor of the bulls. The key entry signal is that we have a rounding bottom. It's not a super strong rounding bottom, however, but I think there's reasons now to become a bit more, at least temporarily, bullish on the US dollar. Looking long term, I am definitely far more bullish on gold, but I think it would be a very good idea for gold to make the big all-time high rally after cooling down a bit. In the meantime, the dollar could strengthen, and then maybe even the dollar could form like a double top. And in that situation, if gold has cooled down, then as the double top forms on the dollar index, gold can then have that final push and break out to a new all-time high. That would be a very interesting setup. So we have some time left. Given that we are on the topic of currencies, let's look at, let's do it like this. It's like this, Bitcoin / US dollar. We use the Coinbase data. Here are the weeklies. Bitcoin really has a tight range, very tight. Looking at the daily data points, it's rare for Bitcoin to behave in this manner. I do like that we have been able to break out above a lot of moving averages here. The only moving averages above us is the blue 100-day moving average and the red 200-day. Looking here at seasonality to the left, it's a bit bearish into mid-January. Now to the right here, we are at 2% 8% gain for the month. 2022 was very bad. 21 and 20 was super bullish. So the seasonality is very messy. But February is obviously a very strong month for Bitcoin. Hence, this could be an interesting time to turn bullish. Alternatively, maybe you get a dip and a mid-January sale on Bitcoin. But there's some very good seasonality around the corner. And yeah, there is some progress here for Bitcoin. Notwithstanding all of the bad news around FTX and the likes, this is interesting. Let's look at yeah, we have looked at gold. So how about exploring various stocks that I find interesting? So it's been some time since I looked at Nvidia. So Nvidia is even related to cryptos, given that the processors are used for mining. On the weeklies here, yeah, we are forming a bit of an inverse head and shoulders pattern, a bit of a shoulder here, a bit of a big head. Maybe this is a right shoulder that could become bullish. Looking at the daily data points, very messy. A bunch of moving averages above us, resistance, blah blah blah. It's messy, very messy for Nvidia. Seasonality is a bit constructive, but not like roaringly bullish. Here are the fundamentals. Price to sales in copper, not that shabby. Price book is okay. Let's look here at the analyst price targets, because a lot of the big mutual funds, they will make decisions based on forecasts of the various analysts, because if they lose money for their clients, they can just blame the forecasts and that everyone is losing money because everyone is doing the same. But yeah, there is some self-reinforcing feedback loop when it comes to forecasts. Minimum price target is 26% below us, average is 32% above, highest is 119% above. So there could be some upside here for Nvidia. We could say that we are bouncing from this purple 20-week moving average, but using a declining moving average as like a support level, it's not best practice, to put it that way. But yeah, Nvidia is interesting. Let's look at Intel, one of the main. Well, AMD is actually one of the main competitors to Nvidia in terms of microchips for graphical processing. AMD is looking way more fragile, very far from any kind of inverse head and shoulders here. Seasonality for AMD, usually weak into late January. Let's look at Intel. Intel Corporation. Intel is emerging from a very low level. Recently, we formed a bit of a double bottom, so that is rather interesting. So let me draw in the double bottom here and here. So how big is the recent rally? So let's measure it a bit. It's 10%, and this is definitively a large cap stock. Looking at the dailies, we are testing blue 100 daily moving average resistance pretty surgically. Are we overbought? Yeah, we are high on RSI, relatively speaking. This is a level where previous rallies have stopped. It's a bit risky on the weeklies. We are far from being overbought for sure. Looking at the seasonality here, we could see some weakness until later January, which could be a better entry opportunity. The seasonality here to the right, 8% gain so far for January, which is a bit on the higher end of the historical spectrum. So pullback could be in store. Price book, price to sales, price earnings very low. The yield, is it that good? 5.6%, that sounds astonishing. Let's look at the yield. So the yield for Nvidia is 5%. That's very good yield for a tech stock. The share price is $29, so it's very easy to buy. Minimum price target is 37% below us. Average is 1.66% above us. Not really that optimistic. Highest is 81% above. Yeah, I do think that the best, buying opportunity for Intel sort of has passed. Um, it's a bit messy. We have a resistance now. Maybe we get a bit of a pullback. Messy. Okay, so we looked at the US dollar. I do think that there's reason to expect some, reversion. It's more about the size of it. We do have the relationship with gold that together, these two, they could form a very spectacular pattern that could be long-term bearish for dollar and long-term very bullish for gold. But yeah, very interesting times here, and I hope that gold doesn't rally too much now because it could be very difficult to break out when you are very overstretched. And if gold were to fail now, attempting a breakout, then that could substantially protract the ultimate breakout for gold.